All right, guys, we are live. So recently I got this really good question. It goes, as a newbie myself, I was wondering about your opinion between having these individual stocks and having just the dividend ETFs. What is your take on this, please? And that's what we're going to be talking about in tonight's live stream, guys. We are going to go through the pros and cons to both sides, investing in individual stocks and investing in dividend ETFs to try and determine which one's going to be the best fit for the average, for the beginner dividend investor. But before we get into all of that, guys, welcome to another Dividend Happy Hour. I'm so stoked to see you guys back here for another week. I think a cheers is in order. So here's to you guys, all 37 of us in the stream so far. And I hope you guys had a fantastic week and got some good dividends. Here's to dividends. So cheers. Also, let me know in the live chat, guys, or the comments below if you're watching the replay, a couple of things. Number one, what are you sipping on tonight for the Dividend Happy Hour? I got myself a little Coke Zero right here. And look at that, guys. Let's see if it'll focus in on this. This is looking nice and crisp, nice and clean. Look at that design, guys. It doesn't get any better than that. And also, number two, let me know what stocks you picked up this week. Let me know that in the live chat. Let me know in the comments below. I'm going to go through and say what's up to all of you guys here. We've got Pat. We've got Mr. Zach Attack, Dividend Kings, Suzuki Man, my man Luis. We've got Jim in here, Rick, Amadou, Madrid. Maybe the bad thing about Coke Zero, guys, get kind of start getting the burp, so I apologize. Wing Addiction, Lucas, Phil, G-Man, Shamir, Kevin. I think I said what's up to Kevin, but Kevin, you get two of them. Aussie Investor, what's going on? We've got CG, we've got Steve. Who else we got here? Will's in the building. My man Shamir. I probably already said what's up to Shamir as well. Yeah, I did. Let's see who else we got here. Brandon's in the building. Cheers, Brandon. Jay, Edgar, Michael, Carl. C&C Fishing. What's going on? We've got Shaping in here. Adon's in here. Denise or Dennis? How do you pronounce this? Help me out with that. Who else we got? Sassy's in here. Sergio, Gianni, Rick, High Tech, Trucksama. Alrighty, guys. And let's see. What are you guys sipping on tonight? We've got a little vodka and Coke. I'm going to go through what you guys are sipping on and what you guys picked up here. So I see a little Realty Income and Verizon. TD, Shamir picked up some TD Ameritrade, or Toronto Dominion, I'm sorry. I don't know why I just automatically go to that. A little Williams Sonoma, Aussie Investor. You know, I've actually been kind of looking more into this company. Yeah, Williams Sonoma, it's definitely piqued my interest these last couple of days. And I'm going to be spending some more time researching that one. But that company's looking pretty good, I think. Who else we got here? What's going on here? I see some more Realty Income, a little Verizon, Texas Instruments, Union Pacific. Let's see here. That's pretty much it. A little SCHD. Edgar's the only one that I've seen here who's bought some SCHD. That's actually very surprising. Let's see here. Some Bank of America, Devon Energy. This one I'm not familiar with. ALVOF. I've never heard of that before. That's interesting. Let's see. What else we got here? Okay, Luis loaded up on some SCHD as well. Very nice. Wow, CJ with a big Bank of America purchase. $2,000. Good for you. Very nice. Let's see. Wow, okay. Some AbbVie, some Pfizer, Main Street. Ooh, Shamir says, Realty Income released their annual report and proxy statement. Did you go through it? Anything good in there? Very nice. Okay. Ooh, a little KRC. See some KRC there. I saw, I don't know if you guys saw this, but KRC's CEO, John Kilroy, is going to be stepping down sometime this year, and I think they're looking for a replacement by the beginning of next year. So kind of an interesting piece of news. Let's see here. Darth's in the building. What's going on, Darth? How you doing, man? And then what are you guys drinking? I saw some Pepsi. I saw some red wine. Luke is drinking some red wine. What else we got here? Ooh, Journeyman bought a little J&J. Let's see. Little Sam Adams, water. Okay. Well, guys, for those of you who are just now joining, what we were talking about, we're going to talk about, I got this comment, I'll put it back up on the screen for you guys who are just joining. This individual, Vladi, says, I was wondering about your opinion between having individual stocks and having dividend ETFs in your portfolio. Just looking for a take between what's going to be better for the average investor to invest in, or maybe we should say what's going to be better for a beginner investor to invest in. And so in this live stream, we're going to go through some of the pros and cons to each side, investing in individual stocks, investing in dividend ETFs, because they both have their pros and cons. And with that, guys, I think we should just jump right into it. And we're going to start with ETFs over here, guys. We're going to start with some of the pros and cons to ETFs. And I think the most obvious pro to investing in dividend ETFs is, number one, it makes investing easy and it makes it less intimidating, which I think is a point that really should be emphasized, because I think complexity and intimidation is a big thing that keeps people from investing in the first place. You know, a lot of people think of these stocks as things that just go up and down and up and down. And people are so afraid to put their money into the market, especially into just one company, because they're afraid that they're going to lose everything. And so that's where ETFs come in handy. It makes it super simple and less intimidating, because you're investing in a predetermined, basically, portfolio of stocks pre-built for you, and the risk of losing all of your money is definitely mitigated because it's just a big basket of stocks, so you get multiple. So the chances of losing all your money is definitely reduced from that. But that's what I would say is the biggest pro to investing in ETFs. But with that, there are a couple of cons. I mean, and this is a con depending on what type of investor you are as well. You have less control over where your money goes. And some people like to choose what they're investing in. And obviously, you know, you can make the argument, well, you can choose which ETF you invest in, so you do have that. But what's in the actual ETF, you obviously do not have control over. And for some people, that can be a problem, which is where individual stocks come into play. But we'll talk more about that momentarily. The other con to investing in ETFs is expense ratios, which for those of you who don't know is essentially the fee that you have to pay. You know, it's basically like a management fee for the ETF. So every year you have to pay a little bit of dues to keep the ETF up and running, keep it going, keep it well managed. And it's really nothing crazy. Like, for example, with SCHD, their expense ratio is only 0.06%, which essentially means that for every $10,000 you have invested in this fund, you only have to pay $6 in expenses per year, which is really not too bad, guys. So as far as I can tell, these are some of the biggest pros and cons to investing in ETFs, but I want to know from you guys. Obviously, this was kind of a short list. What do you think are some of the pros and some other cons to investing in ETFs that I might have missed? Let me know that in the live chat real quick, and also let me know in the comments below if you're watching the replay. I'd love to see your guys' take on this. And Pat here says you have light circles on your face. I know. It's just the lighting. There's nothing I can do about it. It'll go away, but don't let it ruin your day. Let's see. Yeah, I want to see what your guys' pros and cons for ETFs are in the live chat here. I'm waiting for some responses, because I might have missed one. I might have missed some. Let's see here. Put some up on the screen before we move on. And I'm sorry if this is distracting, guys. I'm sorry. Okay, okay, here we go. Scott with our first pro here. Pro is that it's simple and easy to invest in many companies with one purchase. Newbies like easy. Absolutely. So Intercomposed here says con is definitely the premium, definitely the expense ratio. Darth is jumping ahead. He's already talking about individual stocks. We'll get there in a second. Well, actually, this is kind of a con. So he says dividend growth with stocks are better than most ETFs. Yeah, that's true. And obviously, it depends on the stock, it depends on the fund. Adon here says upside of an ETF is that it frees up time not spent on managing and picking individual stocks. That is very true. ETFs are much less time intensive, much less input required than individual stocks, which is great. You know, ETFs, you can buy into them and invest in them for years and years, and it just kind of grows in the background while you do other things. And that's a huge draw to ETFs for many people. So let's see here. TCAS says both a positive and a negative. ETFs don't move too much, but equally it doesn't move too far down. So true. True, less volatility. And Journeyman kind of said the same thing here. With an ETF, you're protected on the downside, but you will miss out on the upside. Luis, pro, extreme diversification. Yes, absolutely. Absolutely. Like SCHD, like what we looked at, has, at this point, I think it's 105, 106 different companies. So that's if that was your only holding, that's still a very diverse portfolio, over 100 different companies. So that's great. Todd here says, this is another good point, just another one on diversification. Greater exposure to different areas of the market, so you're not as concentrated in one company, one industry, one sector. You got a lot more diversification. So last one here before we move on. So Kevin here says, on average, the dividends are less than optimal. Some of the holdings are less than, some of them are more than just average. Yeah. I mean, I don't want to keep bringing up SCHD, but it is kind of the gold standard of dividend ETFs, I think, at this point. The dividend stats on that one really aren't too bad, but you look at something like a VU, it's not that great. I think sub 2% yield, right? So that's nothing to write home about. Let's see here. Okay. This is actually an interesting point. I do want to bring this one up before I move on. Brandon says, as an early investor or beginner investor, it's difficult to know that two ETFs from different companies are very similar and no need to invest in both. That is a great point. So he mentions VUG and SCHG are very similar. Another one, VYM and SCHD, super similar. And I get questions all the time. Which one should I invest, or should I invest in both? You know, I see a lot of people invest in both, but really with those two specifically, I don't think you need to have both of them. One will do just fine. And we got a super chat here from Zoatang TV. Thank you so much for the super chat. He says, the pro is ETFs will perform better than picking stocks. 85% of individual stock pickers can't beat the S&P 500. So let's go back to that first statement. The pro is ETFs will perform better than picking stocks. Possibly. We're actually going to take a look at this, an example of this later on in the live stream, where we take a look at a portfolio of individual stocks versus versus just a dividend ETF to see how it might stack up. Because obviously it depends which stocks you choose, and you pick one wrong stock, it can really have a big impact on the performance of your portfolio. But we're going to take a look at that later on in the live stream. With that, guys, I think we should move on, talk a little bit about some individual stocks here. So let's go back over here. Getting into the pros and cons of individual stocks. The first pro, in contrast to what we saw with ETFs, the first pro is there's no fees. You don't have to pay an expense ratio. There's no fees. There were transaction fees, but most brokerages, at least here in the United States, have dropped those. But no fees investing in individual stocks. That is the first pro. And the second pro, which there's an asterisk there because it's actually both a pro and a con, but this is absolute control over where your money goes. And this can be good. This can also be bad for a couple of reasons. The pro to having more control over where your money goes is if something good happens and you make the right pick and the stock goes up, all of the gains are a direct result of your decisions, which more than anything feels good. It feels good to know that you chose something and that one thing worked out. So psychologically, that could be a really exciting thing. But then on the other hand, there's two sides to this coin, guys. The con is that if you lose money, you pick something wrong, all the losses are a direct result of your decisions, which on the other hand won't feel as good as if the stock goes up. So, you know, either way you slice it, it's all on you. That's kind of the point here. But the other con with having more control over where your money goes is it leaves the potential for more turnaround in your portfolio, which is a very common thing. I mean, people sell out of stocks just out of boredom sometimes. People sell stocks because they get afraid that they made the wrong decision and sold out, sometimes prematurely, sometimes not, but sometimes so. And if that control is taken away from you, like when you invest in an ETF, you know, the turnovers maybe not as much of an issue. I mean, kind of, sort of. With SCHD, they do whatever it's called, the reconstitution every single year. So there is some turnover there, but it's not panic selling. It's not selling out of boredom. It's kind of a different purpose. So anyway, guys, there is some good and bad to being able to pick which stocks you invest in. But anyway, going back over here, going over to the cons of individual stocks, like you guys were saying in the live chat, individual stocks are much more time intensive, okay? There's a lot more that goes into researching companies and spending time getting to know them and comparing different companies. And deciding which ones you're going to invest in, it takes a lot more time, a lot more input on your end. But for some of us, a lot of us here actually, this is where the fun is. Some of us, I guess, just, I don't know, we're kind of sick in the head, and we like researching companies, and we like, I guess this could be a pro or con as well. We like researching companies. We like getting to know them and kind of tweaking this stuff and custom building our portfolio. The time is worth it. And for a lot of us, it's, it's a hobby of ours. So I guess it can be a pro and a con. But with this, guys, with this input, this learning about companies and doing the research, there's a huge learning curve. It's almost like learning an entirely different language, especially for a lot of us who don't have a background in finance. This can seem like learning French, just learning about PE ratios and learning how to read income statements and balance sheets and statement of cash flows. All this stuff can be very foreign, and there's a huge learning curve. It takes some time to get the hang of this stuff. And for a lot of people, like, that can be very intimidating. And so for those people, they could look at researching, they could go on Seeking Alpha's homepage, look up Coca-Cola, and whatever they see there, it could just be freaking them out, just too much information, not know what's going on. But with that too, like, what are, similarly to what I asked with ETFs, what are some pros and cons, other ones, to investing in individual stocks that I didn't mention here? I'd be curious to get your guys' thoughts here. So Taylor right here says it. Single stocks are honestly more fun. Choosing which companies you want to invest in, choosing companies you like, etc. But I still think just investing in broad market ETFs is the better choice overall. Okay, fair enough. Let's see. Keep going. Lucas says, I've been at this a year and I still feel in the dark at times. I mean, I'm right there with you, Lucas. I've been doing this for, I think, about 3 years now. And, there's still so much to learn, which on one hand can be intimidating. But on the other hand, that's kind of where the fun is. And that's why we like doing it, because there's always something new to learn. It's a fun hobby. Let's see here. TCAF says, personally can attest, learning French is much harder than understanding investing. It's just a figure of speech, TCAF. Like, don't take it literally. And Chris here says too, individual stocks can be risky, but I love risk. That's true too. There can be more risk. Let's say you only just end up investing in 5 individual stocks or 10 individual stocks or 15. That's a lot less diversification than what you'd get with most ETFs. So that's a great point. Let's see here. Let's see. Okay. One more con of stocks. You need to make more effort to diversify your holdings. Very true. All in all, there's just more input that goes into holding individual stocks. But like I said, for some of us, that's where the fun is. It's fun learning about these. It's fun diving deep into these companies and learning about the financials and the fundamentals. I don't know why that is fun. Why is anything fun? We just have a certain affinity for it, I guess. Let's see. Madrid Stock Pro is they can drop in any price for hardly... Okay, so basically any piece of news, the stock can fluctuate in price based off the news is what Madrid here is saying, which is true, and that's something you don't really get with ETFs because there's a lot more diversification. So let's see here. Yeah, Lucas here says, it's definitely the psychology of the market that makes me love it. Not knowing what's going to happen, no one does. That's very true. Yeah, and this is kind of a con, I think, too. If you invest in stocks, you may be investing in companies you know, but an ETF will have companies you don't know about or care about. So that just goes back to being able to have absolute control over what you're investing in, which is, like I said, a pro and a con. Because just because you don't know about a company doesn't make it a bad one, and just because you do doesn't make it a good one. So, but I get what you're saying. Having that familiarity and having that control over where your money's going can be important to a lot of investors. But anyway, guys, with that, let's take a look at a portfolio of individual stocks and see how that might perform. We're going to actually take a look at a couple examples. Perform against an ETF. And obviously with this ETF, guys, we're going to use SCHD because which other one would we use? And real quick too, just kind of backstory, the comment that kind of spurred this whole this whole topic came from the video that I did, which is the perfect dividend portfolio for new investors. And in case you didn't see that video, in that video, I made this portfolio of 10 individual dividend stocks, all big blue chip companies, which we'll see them all in just a moment. We'll see all of the holdings. And the whole point was just to build this portfolio. I called it the perfect portfolio, just very well diversified. You got stocks from pretty much most sectors, wide range of industries, all big blue chip companies with a history of growing, paying their dividends, and a history, for the most part, of outperforming the market. So it was a really solid portfolio, but let's see how this perfect portfolio, quote unquote, stacks up against SCHD, which what I've referred to as the holy grail of dividend ETF. So we've got the perfect dividend portfolio versus the holy grail of ETFs. It sounds like a pretty good battle royale. But anyway, guys, in this perfect portfolio, we've got Kroger, we've got Pepsi, a dividend king, we've got Lowe's, another dividend king, we've got Apple, who's returned, I think, somewhere over 1,000% across the last 10 years. Just crazy returns. We've got Waste Management, iconic company, Verizon, nice high yielder, Johnson & Johnson, another dividend king, MasterCard, a huge dividend growth company, and then Chevron, who's just crushed it, and then Realty Income, the monthly dividend company. And in this example, guys, we're going to take a look just the last 10 years, 2013 to now, year to date. Actually, we want to include year to date, yes. And we're going to start with an initial $10,000 with $100 contributed into the portfolio every single week. And like I said, we're going to be comparing this against SCHD. And I need to go here, analyze portfolio, so it refreshes with the including year to date. So here we go, guys. Let's scroll down. So portfolio number one is our perfect portfolio here. And across the 10 years with an initial investment of $10,000, you'd end up with nearly $150,000 in this portfolio. So that's really good. And this actually beats SCHD by about $20,000. So you generate more of a return with this perfect portfolio, which only has 10 companies compared to SCHD's, over 100 different companies. And the thing about SCHD too, SCHD's performance is nothing to turn your nose up at. A lot of you guys know SCHD has actually outperformed the S&P 500. They've beaten the overall market pretty much since inception, if I have that correctly. But anyway, we're going to look at this a little bit more in depth, guys. But the thing about this perfect portfolio too is in the best year, you'd be generating a bigger return, but in the worst year, SCHD would actually have seen less of a drawdown by a few percent, 8.7% versus 5.5%. So that's, not too different, but, technically SCHD does take the cake on the down years. But the thing is too, guys, like I was kind of saying earlier, you make one bad investment. We switch out one of these stocks and it could completely change the whole scenario. And in fact, let's actually take a look at that. So this portfolio performed really well, but let's say, guys, let's say instead of Apple, I don't know why one would do this. I actually did this, but don't, I guess do as I say, not as I do. But let's say instead of Apple, you just decided, you know what, I have a really good feeling about Intel. I think Intel is going to be the tech stock to win. And let's say instead of Apple, you would have went with Intel. And I know this is just past performance, not future performance, guys. I get it. But we're still going to take a look at this anyway. If you would have just invested in Intel instead of Apple, just switching out one company, just one company. And remember, guys, this is all equal allocation, 10%. So you're just changing 10% of your portfolio. Look how that changes things. Just making that one switch, and SCHD is now beating this portfolio. You've just lost $30,000 by choosing one wrong stock. So, I guess the moral of the story is it could really go either way, and that just goes back to what I was saying. It's all on you when you're picking individual stocks. It's all on you, the good and the bad. You make the right decision and go with Apple across the last 10 years. Great, you can pat yourself on the back. But you go with Intel, your return's still going to be nice. You still have $126,000, but looking at the results compared to what you would have had if you went with the other company, it's like, even though you have $126,000, you'd probably still be feeling some sort of way about that. You know what I mean? So, just kind of interesting. And, having said all of this, it begs the question, so which one's better, individual stocks or ETFs? And this is such a cliche answer, but it depends, right? It depends which companies you choose, number one, because different portfolios are going to have drastically different results. But number two, It depends what your preference is as an investor. Are you someone who likes to get in the weeds and has an interest in learning more about these companies and learning how to research them, and he doesn't mind spending the time to get familiar with all this stuff and take the time to learn? Do you see this as a hobby, or do you more so just see this as something that you have to do, which is true? Like, everyone should be investing in some capacity or another. And we all, it's well covered territory as to why. If you don't find some way to make money in your sleep, classic Warren Buffett quote, you're going to work until you die. So everyone has to invest, but how involved do you want to be? If you want to be more involved, then, it's fun. It's fun going with the individual stock route. But on the other hand, if you're like, I don't care, I just want to do it because I know I have to, and I just want to set it and forget it, then go the ETF route. And having said that too, like, you can obviously do a hybrid approach as well, which is probably what's going to be the best route for I shouldn't say the best route, but the most common route for most investors. Use an ETF like SCHD or VU or VTI as the base of your portfolio, and choose a few individual stocks around that. I think that's ultimately a pretty good way to go for most investors. I know a lot of us here in the stream do that. And if someone's just starting out, that might be the best way to go. Maybe just starting with an ETF and then testing the waters with that, and then seeing where you're going to go from there, seeing how it feels. And you can always get more involved from there if you want to. But then on the other hand, if you start with a portfolio of individual stocks and decide that's not your cup of tea, you can always switch gears, liquidate that, and just go the ETF routes. And that's the good thing about stocks in general, is it's so liquid. You can change your strategy at any given time. I think that's a good thing and a bad thing, right? And that's where having some discipline really comes into play. It's not always switching gears, but it is important to know, in closing, it is important to know which camp you fall into and what your preference is and what your style is as an investor. It's good to know what sort of investor you are and use that to guide your strategy. But with that, guys, I want to hear from you. In your portfolios, what do you do? Do you just invest in individual stocks? Do you just invest in ETFs? Or do you take some sort of hybrid approach where you have both? Let me know that in the live chat, and also let me know in the comments below. And I see the first response here from my man Joel with a $2 super chat. Thank you so much, my friend, who says hybrid is the best. What do you guys think? What do you do? Individual, ETFs, hybrid? Let me know. I'm curious. Me personally, I mean, you guys know I've got my one portfolio of individual stocks on Charles Schwab. Then I have my Roth IRA, just all ETFs. So we got a little hybrid approach going on there. So let's see here. Jay here says, that's what I'm doing. SCHD and some stocks. SCHD is my biggest allocation. Let's see here. Adon says, thanks so much for showing us the website for backtesting portfolios. Going to have a blast playing with that. You absolutely will. You could spend a lot of time doing that. Madrid here says both, taking a hybrid approach. Same with Jack and Dominique and Jonathan and Adon and Darth and Rick and Todd and Rui, whose only ETF is SCHD. Craig also is taking a hybrid approach. Let's see here. And then Scott here is actually zigging while the rest of the chat is zagging. Individual stocks makes me more connected to the brand, especially when I see it in the wild. Yeah, and so far it looks like pretty much all of you guys take a hybrid approach. Yeah, it looks like Darth and I have a pretty similar strategy. Hybrid for IRA, hybrid for dividend. Oh, kind of, sort of. I'm one and then the other. Not hybrid, but in both. Yeah. Kevin's actually the only one it looks like who does individual, but he said if the market proves him wrong, I'm willing to go with the ETF route. But otherwise, it looks like pretty much all of you guys, well, Jim here too is all individual. You could argue that IEP and Berkshire Hathaway are almost like ETFs. Yeah, that's true. Yeah, pretty much, and Amadou as well, all individual, but pretty much hybrid. And I haven't seen, interestingly enough, I haven't seen one person that says just all ETFs. Just all ETFs. No individual stocks, just all ETFs. I don't think I've seen that yet. But a hybrid approach is good. I think that's the best of both worlds. You get the fun of picking some individual companies, but at the same time, you maintain that diversification with the ETFs. And I don't know. I just think for most of us, for the average investor, that's just a good way to go. Oh, Taylor here is all ETFs. Okay. We got one. And then Nick here. 401k is ETF only. Oops. And this is actually a good question. How do we evaluate ETFs? By the companies it holds? So there's a few different ways you can look at ETFs. First and foremost, I would go to the ETF website and I would read the fund prospectus and the fund fact sheet, which basically tells you more about the ETF, what index they follow, what their objective is, what their goals are with the fund, and how they choose stocks for the fund. I think that's a good way to get familiar with ETFs. You also want to look at the share price performance. How does it stack up against the market as a whole? How has it been performing? Definitely look at the holdings, get familiar with them. Are those the kind of companies you'd want to invest in? And then look at the dividend stats as well, dividend stats and expense ratios. Those are a few things to look at when analyzing ETFs. So let's see here. So Deontay wants to know, are REITs considered stocks? My Robinhood portfolio is underperforming currently. Yes, real estate investment trusts are considered stocks. They are. Good question. Good question. Guys, there is 213 of us in the live stream right now. That is awesome. We are seeing 200s kind of becoming the norm now, which is fantastic. And in fact, last week, we actually broke a new record. We had up to 255 people in the live stream at one time, which is just mind-blowing. So I would just, thank you guys so much for always tuning in every single week and hanging out and help keeping the Dividend Happy Hour alive and growing, because this is really so much fun to do. I really enjoy doing this every week, hanging out with you guys. So thank you. Yeah, Rui says, get some likes, guys. Guys, if you have not liked the live stream yet, please leave it a thumbs up if you're having fun, if you're enjoying my gibberish tonight. So, Luis here says, we need to get to 300 and scream, this is Sparta. I'll tell you what, Luis, we get to 300, I'll go put a cape on, and I'll get, I don't have a sword, but I'll get a broomstick, and I'll do that, and I'll even do a Spartan kick. But just make sure I'm kind of far away from the camera because I don't want any accidents to happen. Don't want to kick you guys in the face. Let's see here. Okay, this is a really good question. So Brandon wants to know, do you have a limit per stock, like no more than 5% allocation in one company? Kind of my rule of thumb is just no more than 10% in one company. And I've had points in the past where I've had more than 10% in one company. Like Realty Income was 11 or 12% of my portfolio at one time. And I'll actually show you, Brandon, how my portfolio is diversified real quick. If we go over here, we're going to jump over to my dividend portfolio tracking spreadsheet, which you guys can actually start using for free. There is a link to it in the description of this video. I hope you check it out. We're now in the 6th version of this spreadsheet, so it's just, hopefully it's getting better and better over time. But looking at the diversification of my portfolio right here, guys, this is pretty much it. Let's actually zoom in a little bit. And you can see here, this is the 10% mark. So no individual stock is above the 10% mark. A couple are close. Starbucks is 9% of my portfolio. Procter & Gamble is nearly 9% of my portfolio. We've got Johnson & Johnson about 7.5%. And I've been working on this one. I've added quite a bit to my Johnson & Johnson position this last 4 months, I've been adding a lot of J&J. And Lowe's I've been buying more lately too, and they're now 6.4% of my portfolio. So as you can see, for the most part, I have a lot of holdings down here, about 5% and below, and it's pretty clear what my core ones are. Starbucks, Procter & Gamble, J&J, Lowe's, and looks like 5th place we have Realty Income and then Altria. So how many of these are Dividend Kings? So 1, 2, 3, 4. Well, that's not top 5. So 3 out of my 5 top 10... 3 out of the top 5 holdings in my portfolio are Dividend Kings. Realty Income's a Dividend Aristocrat, and Starbucks has over 10 years of growth. So that's pretty solid if I do say so myself. But yeah, that's pretty much how my portfolio is diversified at this point. I don't really keep tabs on how well it's diversified. I just kind of make sure not to go too overboard. I just try to make sure not go too overboard with my buying. Let's see here. Steve here says, I'm watching on 23 devices, so that helps. That's hilarious, man. Thank you. Daniel says, are you a certified financial planner or CFP? I am interested in investing and think this would be a great field to get into. Wanted to get your opinion. No, I'm not certified. It's something I've looked into, and it doesn't seem like it's too difficult of a thing to do. I think you just have to... I actually wrote it down. I wrote a note in my phone down. I'll pull it up. So from my understanding, and you guys actually might know more about this than I do. From my understanding, there are 3 different exams you have to pass. And let me find it. Maybe I don't have a note. I thought I did. If I don't find it quick, I'll just, it's not that big of a deal. No, I can't find it. But from my understanding, there are 3 different tests that you have to pass to become a certified financial planner. And I've looked at, there are sample tests online for them. And at least the first one, kind of the entry-level one, really doesn't seem too difficult. Like, if you spent some time as an investor, a lot of that stuff will at least be pretty familiar. So that was kind of cool to know. Oh, Lucas, how is Psychology of Money so far, Ryan? I don't know if you guys can see it right over there. That's Psychology of Money right there. Then I got my Ben Franklin book right next to it. I love it, man. I really like Psychology of Money. It's been a great read. It's a very easy book to read as well. I started it earlier this week, and I'm over halfway done with the book. It's only about, I think in total it's maybe like 215 pages. And like I said, it's very easy to read. The words are very big on the pages. Each chapter is maybe like 10 pages, so it's pretty good one to get through. I'd highly recommend it. Let's see here. And then I'm so excited too, guys. Like, after I finish Psychology of Money, I am finally going to dive into the Little Book of Valuation. Really want to start reading this book. I haven't been reading a lot of finance books lately. I've kind of been more reading like my Ben Franklin biography. I read my Warren Buffett biography. I don't know, I've just been reading other things, but I'm excited to start reading some more finance stuff again. Start learning more. I might even start going back through The Intelligent Investor. I've kind of been thumbing through it a little bit. It's just right over here. Just kind of thumbing through it, and I don't know. I'm just kind of, I think it'd be a good one to read. When I try to read it when I first got into investing, but I'll be honest, guys, at the time it was so boring and I didn't understand a lot of it. It really reads like a textbook, but I think that would be different now. So I think I'd like to give it another shot. So Journeyman wants to know, Ryan, what do you think about Intel's performance as of late? I love it. I'm really happy to see it going up. I mean, my average cost per share with Intel is still in like the mid 40s, so I'm really looking to get back to breaking even or as close as I can to it. So I welcome it. And from my understanding too, I've been trying to read up a little bit on this. It seems like that came as a result of they had some sort of presentation, some sort of, I don't exactly know what it was, but basically it talked about some of their products coming out, and it seemed like there were some pretty good results from the products they're putting out, mainly in the AI, their AI chips, something. I need to read a little bit more into it, but it seemed like they had some bullish sentiment from after that. So good to see. Okay, couple really good questions here. So where'd it go here? I lost it. There was a really good comment. Couple really good comments. So I'll start with this one. Jeremy says, what do you think about MPW getting rid of some of their hospitals? So they started selling off, or they're trying to sell off some of their hospitals in Australia. I think that's what it is, right? And I was thinking about this earlier this morning. I'm kind of torn, because on one hand, it's nice that they're able to sell. I mean, the real estate market's kind of been interesting, so it might be a good time to sell those assets. But then on the other hand, for a real estate investment trust, I think less assets means less rental revenue. Less rental revenue means less adjusted funds from operation, which could potentially not be good for the dividends. So that is something a little bit concerning. But they can, if they needed to, they could use some of the funds from the proceeds from that transaction to fund the dividend. But I don't really like that. I don't know. So I don't know. I'm on the fence about it. And I'll be honest, I have not been keeping super close tabs on MPW these last few months. I talked about it in a few videos a while back. But since they're not the most recent quarterly earnings report, but the one before that, I probably haven't been keeping tabs on MPW since then, really. Just here and there. And Luis here says, oh, that was for Austin. Never mind. Oh, Dennis, this is a good question. What are your thoughts on the professor's new 3-fund portfolio, VU, SCHD, and SCHG? Is that what the 3-fund portfolio was? Is those 3 ETFs? Because I'm not 100% certain. If that's the case, I think that's solid. I think that's pretty nice. I don't think there's anything wrong with that. Yeah, Luis says, I cannot read. I fall asleep after a page. I'd rather listen to podcasts and watch YouTube videos or documentaries, maybe audiobooks. Yeah, I get that, Luis. It's different. It's definitely different than watching YouTube video or listening to a podcast or an audiobook, excuse me. But I can say sometimes I'm the opposite. For example, this little book evaluation by Aswath Damodaran, Professor Damodaran. He's got a really awesome YouTube channel where he basically puts all his lectures and stuff on there for free. I watch those and I'm like, oh God, it's so hard for me to sit through that, to be honest with you. But then reading it's different for me. It's just the video is too slow of a pace for me to enjoy, but reading I think it's a little bit slower pace anyway. That's just how it's supposed to be. And so I don't mind it in that context or in that medium, if that makes sense. I don't know. Let's see. Oh, Mo, I'm so glad you brought this up. Do you listen to the Founders Podcast? He goes over what he learned from biographies. Yes, I just found out about the Founders Podcast last week. I've listened to 2 episodes so far, both of which the first one I listened to was I Had Dinner with Charlie Munger. It's like his most recent episode. And then the other one I listened to was something about Warren and Charlie as well. But I really enjoy it. I think that's a great podcast. And I've added it to my podcast library on the app. I'll keep listening to it. Really enjoy it. Let's see here. Yeah, Louis says the only reason I enjoy my drive to work is podcasts. Yeah, I really enjoy listening to podcasts. I'm kind of weird. I'm really hit or miss with YouTube. I go through phases where I'll watch a lot of YouTube, incessantly, and then I'll go through phases where I really don't watch much YouTube at all, and I'm kind of going through one of those phases right now. But when I'm not watching YouTube, that's when I'm reading more. That's when I'm listening to more podcasts. But then on the inverse of that, if I'm watching more YouTube, typically I'm not reading as much. Typically I'm not listening to as many podcasts. So I don't know. It's kind of interesting. And that's really the double-edged sword of, I just think, the time we live in right now. There's access to so much information, which is fantastic. Makes it easy to learn or accessible to learn whatever you want. But at the same time, it can be quite overwhelming because there's almost too much good content out there that it's hard to keep up with it all. So you kind of have to prioritize. Let's see. Yeah, Madrid here says, I just read Seeking Alpha articles and watch you and Darth. Well, those are two good guys to watch, I think. One more than the other. I don't know why you guys tune into my gibberish, but Seeking Alpha articles are great too. I really like Seeking Alpha. Seeking Alpha has been such a great resource, I think, and we're really lucky to have it. And the articles too, I've kind of started to see the articles not as, it's kind of the same as YouTube videos. I look at YouTube videos as great places to go to get ideas for different companies to invest in. Obviously, this goes without saying, but I'll turn this up a little bit. YouTube videos are not I don't think they count as due diligence, really. I just think it's a good place to go to get ideas, to learn about new stocks, maybe catch up on ones that you're already familiar with, stuff like that. I kind of think Seeking Alpha articles are the same. When it comes to doing stock research, I've been really trying to lean more on things like quarterly reports and annual reports and things like that I think make it easier to come to your own conclusions about what you're looking at. Hopefully that makes sense, but I've kind of tried to go more in that direction, and I still read a lot of Seeking Alpha articles and stuff like that, but I think it's good practice to get familiar with the quarterly reports and the annual reports, and I think it makes it easier to, like, they're boring too, like can be pretty dry stuff, at least the annual reports, the 10Ks, but I think they're important. Let's see here. You guys are still talking about MPW, it looks like. Let's see here. So Lucas says, could you have a peek at HMAX? I know I looked at that one quite a while back when it first came out, but let's see if there's anything else on it. HMAX, this is it right here. Currently no expenses data. I mean, dividend yield's nothing crazy. I mean, it just kind of came out, so maybe it needs some time to establish some dividend history there, but what are the holdings? Top 10 holdings are not available. So really, Lucas, there's still not much information about this ETF on Seeking Alpha, unfortunately. Yeah. Let's see. Okay, Jim says, after the SEC filings, annual reports, etc. from the companies, all the YouTube videos, articles, etc. are just someone regurgitating that original information. Yeah. Yeah, definitely. That's a good way to put it, Jen. And it's cool too. Like I said, it's good. I think it's a good starting point, and it's good to. I think it is good to hear others' opinions, to hear both sides of the argument when it comes to certain stocks. Like you go look up MPW, you go look up Intel right now. There's going to be articles talking about both sides. There's going to be those that are for buying it, those that are for selling it. It's good to see what both sides have to say. Okay, this is a good question here. Jeremy says, at what point do you think your snowball really kicks off? I'm a year in at $2,500, and I still feel the snowball moving slow. Well, so Jeremy, when you say $2,500, do you mean that you have $2,500 invested, or that's what your annual dividend income currently is? Let me know here in the live chat which one it is. I mean, if you're at $2,500 in annual dividend income a year in, I'd say you're doing pretty dang well. I mean, even $2,500 just starting out, if that's your portfolio value, then I think that's great too. The important thing is that you've started. We say this all the time. This isn't the first time you'll hear me say this, and it certainly will not be the last. Dividend investing really is a slow burn. Like when that dividend snowball, when you first start putting that snowball together, it's really small and it's going to roll really slow and it's not going to have a lot of momentum. But as time goes on, after you keep doing it and keep at it, obviously that's going to pick up some steam. And the good thing about dividend investing too is the longer you do it, the better it gets. And to answer your question, at what point do you think it really kicks off? You know, I think you'll start to really, and I made a video about this on my channel. It's actually called "This is when your dividend snowball really takes off." So go check that video out. But the point I made in that video is, at least for me, it felt like it really started to become something substantial when I was able to buy like whole shares of stock just with my dividends. Like for example, Altria Group. Every single quarter at this point, I think I'm able to get between 1 and 1/4 shares, 1 to 1.25 shares of Altria Group, just from dividends being reinvested if I wanted to. And I don't automatically reinvest my dividends. I take that money and I manually reallocate it. But if I was to automatically reinvest it, that would get over one full share. And for me, when it got to that point, I'm at that point with a few companies. That's when I think that's when it starts to feel like it's really kind of starting to become something cool. And it's not just like, well, I'm getting $3 dividend, which, hey, don't knock a $3 dividend. That's $3 you made from not having to do anything. That's really cool. And furthermore, a lot of people aren't even that far ahead. They're not even thinking. A lot of people don't even know dividends exist, which is something I'm actively trying to change because I think it's such a cool thing. But let's see, where are you at in the comment here? But anyway, long story short, it takes time. You're only 1 year in and you're already at $2,500. That's great, man. Like, keep up the good work. And you know what, too? I think having a portfolio and actively contributing to it, it gives you something to work towards. Like, I know for me, having this portfolio and making it a goal to grow this thing as fast as I can and really prioritizing this, it's motivated me to do a couple of things to help further that goal. Number one, it's motivated me to try and actively increase my income, which is one of the things that made me want to start this channel. I loved what I was doing. I love where my portfolio was going. I love talking about this stuff. I love doing it. And I knew that having a channel like this could help. You know, it's a hobby for sure. It's now my full-time job, but I knew it would be something that could help make money to put more into the portfolio. And so as the income from this continues to grow, that's just going to be more that's going into the portfolio. But also number two, it's motivated me to lower my expenses and really prioritize the things that matter and not spend it as much on frivolous things. And that never really was a big issue for me. I'm a pretty simple guy. Like, the things that I spend the most money on are probably just going out to eat, which I don't even do that much anymore. And when I do, it's usually paid for by like Visa gift cards that I get for birthdays or Christmas or something. But anyway, the point is, it's motivated me to do what I think are some pretty positive things outside of just investing and finding ways to do more of it. So keep it up. Like, investing teaches you a lot of good habits, I think. And there are some benefits that come from doing this that aren't directly related to receiving more dividend income, if that makes sense. So let's see, keep going. Oh, okay. This is a good question. So Brandon here says, have you ever participated in a dividend capture strategy? Please tell us why we should or shouldn't do this. So I never have. And for those of you who don't know, dividend capture strategy is essentially when you buy the dividend stock, like just before its ex-dividend date, and then right after that ex-dividend date, you sell. So you're basically buying a company just to receive the dividend and then selling it afterwards. And I just don't really see the point. I really don't see the point in doing it. I honestly can't think of one reason why that would be a good strategy. That just seems like so much work for nothing. I just don't see the point. Have any of you guys done that in the live chat or in the comments below? Like, have any of you guys done a dividend capture strategy? And enlighten me too if you have. Like, what's the draw? Why do people do that? Because I don't understand it. Okay, this is a good question too. Caitlin wants to know, what are some great tools that you use for analyzing and tracking stocks and dividends? So when it comes to tracking my portfolio, just tracking the performance of my stocks, all the dividends I receive, I use my dividend portfolio tracking spreadsheet, which I said earlier, there's a link to it in the description of this video. It's totally free. You just click the link and you can put in your email and you'll be sent the links to the spreadsheet. But it shows you all this information here, like portfolio performance, your market value, how much dividend income you're bringing in every year, month, week, daily. You can keep track of your portfolio month over month, year over year. Same thing with your portfolio value, see how it's growing. You can keep track of all your positions right over here. And it even links to, if you click this, it'll take you to the Seeking Alpha page for that company, which is another tool that I use to research stocks and get ideas. Seeking Alpha, it's been a really good one. Highly recommend that. Some other good tools and resources that I'd recommend are the dividendtracker.com. I think that's probably honestly a better alternative to using my free spreadsheet, because you can use the dividend tracker as well for free. There's a premium version as well, but the free version is awesome. And trackyourdividends.com is really good. Alphaspread.com is a really great website as well. There's a lot of great tools and resources out there for investors, and it seems like there's more popping up every day. Let's see. Let's keep going. Keep going here. We got about 5 minutes or so left here in the stream tonight, guys, and there's still 200 of us here. That's awesome. Let's see here. Keep going. Yeah, and so regarding the dividend tracker, Jim here says it's $99 for the full year and it's well worth it. Yeah, so, and I've actually started using it more too. Actually, in the video that I'm posting on Sunday, I'm going to use one of the tools on the dividend tracker. I'm going to start using that more in some of my videos, but I think it's a great, like I said, it's probably a better alternative to my spreadsheet. So, but some people like spreadsheets. Like there's just something about a good spreadsheet that is really, really enjoyable. So it's so interesting. I've noticed that people are, even if there's a better platform, like I'll say the dividend tracker is probably better than my, not probably, it's better and easier to use than my spreadsheet for sure. But there's just something about a spreadsheet. I don't know what it is. Really don't. There's just something about a Coke Zero too. Let's see here. What else we got? What else you guys got for me? Couple minutes left here in the live stream. And no Chipotle tonight. You know, I kind of haven't been doing the Chipotle Fridays lately. I did go earlier this week though. I went to Chipotle earlier this week for the first time in probably a month actually. Oh, this is a good question right here. We're real quick. I see some love for the spreadsheet, so I thank you guys so much. I really appreciate that. I've worked hard on it, and I'm not knocking my spreadsheet at all because I really love it, but it's just different. Spreadsheets are a different vibe. So Jay here says, oh God, okay. Jay here says, when are you starting your Patreon? Man, I wanted to have it up and running by now, but I'm actually glad you brought this up because I wanted to talk to you guys about this. And I see that there was a super chat here from Del Bomb. Del Bomb, thank you for the super chat. I'll get to it in just a moment after I answer this question. So I really wanted to have my Patreon up and running by the end of the month, by now basically, but I keep switching around the offerings. I've been very indecisive about what exactly the offerings are going to look like, but I now have it pretty much dialed in. So initially I was thinking, and I have another, in addition to my free portfolio spreadsheet, I have a stock analyzer spreadsheet that I've been working on. And some of you guys have already seen this, but stock analysis spreadsheet, it shows some good financials. I've shown it in some of my videos too. It's got an intrinsic value calculator on it. Really cool tool that I'm really happy with. And like the free portfolio tracking spreadsheet, that will evolve over time. And initially I wanted to include that on my Patreon, make that part of one of the offerings. But the more I thought about it, the more I wasn't really happy with that. And so what I'm going to do now is I'm going to, instead of having that spreadsheet be part of the Patreon, I'm actually going to make it something separate. I'm going to have like a different site for that spreadsheet, and I'm going to make it a sort of donation thing. I'm going to give it away for free, but people can donate to it if they want to for it. And I'm kind of putting that on the back burner for now. I want to get the Patreon up and running first. And so with that, what the Patreon's going to be now is basically just the Dividend Happy Hour after party, where basically after this first hour, we'll take a short little intermission, few minutes, catch our breath, and then go live again on the Patreon for another 30 minutes to an hour. So basically double the Dividend Happy Hour with the second hour going on the Patreon. And that'll be a weekly thing. And so starting out when it comes to the Patreon, that's pretty much going to be it. And I'll probably do other live streams, just random ones every now and again. Because there's times, guys, where I'm just like sitting around and I just feel like hopping on a live stream, just middle of the day, middle of the weekend or something. But I never do it because sometimes doing it on YouTube is a whole to do. You got to come up with a thumbnail. You got to come up with a good title, a good topic to talk about. And so sometimes that keeps me from just doing an impromptu live stream. But I'll probably do some more bonus ones, some more additional ones. And I'll probably put out extra content on Patreon as well. But for now, basically, the Patreon's just going to be more Dividend Happy Hour, more additional random live streams. And then at some point, what I'd like to do, I've been thinking about this more. At some point, what I'd like to do is I would like to start doing daily Monday through Friday live streams, I think. Market Mondays, maybe buy some stocks live Monday morning when the market opens. Basically do like a market open sort of thing where we hop on right before the market opens, hang out, see what the market does, see what's going on in the portfolio, chat a little bit, and then call it a day. I want to start doing that as well, but I want to get, once I get the Patreon up and running, just extra Dividend Happy Hour, and we're going to slowly expand it and make it better from there. So hopefully that makes sense. I know that was a very roundabout way to answer this. So Delbomb says, thanks for the content. Thank you for the super chat, by the way, $5. That's super generous. Thanks for the content and constant kindness. Man, thank you, man. I appreciate you guys. I wouldn't be able to keep doing what I do, which I love what I do. I wouldn't be able to keep doing this if it wasn't for you guys. So I'm extremely grateful for all of you. Oh, Jim here says, how's the pre-summer diet going? It's actually going pretty okay. So I'm about 4 weeks into the diet. This is week 4 right now. And I haven't lost much weight. I'm actually just really easing into the whole thing. I'm probably down maybe half a pound to a pound so far, which is actually to be expected. Okay, so I'll try and explain this as quick as I can, because I'd see there's a lot of other questions here that I don't want to leave you guys hanging. So there's a thing called your maintenance calories right here. Your maintenance calories are basically what you need to live every day. If you're at your maintenance calories, anything lower than that, over time you'll lose weight. Anything above that, over time, on average, you'll start to gain weight. So, and this is a constant moving target too. It moves up and down just based on the speed of your metabolism. The faster your metabolism is, the higher your maintenance calories are going to be. And also, the more active you are, the higher your maintenance calories are going to be. On the inverse of that, the lower your metabolism is, the slower it is. The less active you are, the lower your maintenance calories, which makes sense. You're moving more, you're going to be burning more calories just to maintain, right? And so that's kind of what I've been trying to figure out so far, is where is this for me? Where are these maintenance calories? And I track my food. This might sound weird, but same thing as like a dividend portfolio, right? I track everything. I track what I'm eating. I track, at least in terms of cardio, how many calories I'm burning. And when I first started the cut a few weeks ago, actually prior to the cut, I was eating 3,200 calories a day, which for me is kind of a lot. 3,200 calories a day, which was slowly but surely moving the needle up on the scale, moving that number up, slowly gaining weight, which is good. That's what I was trying to do. But now I'm kind of trying to do the opposite. I'm coming back down. And so I'm slowly but surely reducing my calories to try and gauge where that maintenance is, right? And then once I find that sweet spot, anything below that, I should start losing weight a little bit more. And I'm pretty close to being there. I bet in the next couple of weeks, I'll start to be a caloric deficit, which is when the weight really starts coming off. But I want to take it slow. You don't want to go from 3,200 calories a day immediately down to 2,000. That's too aggressive, and it doesn't give you much room to keep coming down from there. So it's really a slow process, but it's going well so far. It's all going according to plan. And just because, having said that, just because the number on the scale is not really going down, I'm still feeling some progress. So, yeah, so moving on, sorry to take so long with that. Star Cruiser, can you update us on your entire portfolio? It's been a bit. I mean, I put out a video a month and a half ago, that's revealing my entire $42,000 dividend portfolio, where I go through all of my holdings, every single one. So check that out, but I'm happy to answer any specific questions about the portfolio if you have them. Okay, good tunes here. What's the largest dividend you ever received, not including a special dividend? Let's go take a look, actually. So over on my portfolio tracking spreadsheet, if we go to the dividend log page, right here, this is going to show all of my dividend payments. And I can tell you right now, my biggest payment would have come from Altria Group. Okay, so it looks to me like my biggest payment ever was right here. Can you see that? So zoom in a little bit. In January 2023, so a couple months ago, I got a $48.10 dividend payment from Altria Group. And that was my highest dividend payment of all time so far. And next month, I'm going to get the same payment. I'm going to get another $48.10 from Altria Group. So Altria paid me the biggest dividend ever. We're getting pretty close to $50 per dividend. So, okay, I want to keep going, guys. I'll tell you what, my ladies at work, I've got no reason to get off this stream right now. So why don't we just keep it going a little bit longer? I'm having some fun with you guys. I'm starting to lose my voice a little bit, but it's okay. And I'm starting to look red too. Jeez, it's because the lighting changed. So Mountain High, I started the KRC position. What's the next one you may be looking to add? I'll show you my watch list right now, actually. So it's looking pretty nice. There's a few companies that I'm kind of getting stoked about. So let's go over to the due diligence list. This is my watch list right here. And I call it a due diligence list because these are the ones that I'm not 100% certain that I want to buy them. I still feel like I need to do some more research into them before I really pull the trigger. But there's a couple that should probably be moved to the buy list that I'm certain that I want to add. They're just not at the right price yet. And the buy list ones would probably be Vici Properties. I'm pretty certain that I want to add that one. Same with Rollins Inc. right here. I'm pretty certain that I want to add that one. But these two companies right here, and I'll talk about this in an upcoming video, Reliance Steel and Aluminum Company and Williams-Sonoma, these are ones that I just recently added, like within the last few days. Just recently added to this watch list. And I'm going to be doing some more research into both of these, but I really like what I'm seeing from both of these companies. And I do see them as potential candidates to be added to the portfolio. But that's pretty much it. And, Bank of America, I don't feel like I need to do as much research into that one. I'm pretty familiar with Bank of America. Great bank. But I'm just not so sure I want to add a bank to my portfolio. So that's why I haven't pulled the trigger on it. But yeah, that's kind of what I'm rocking with there, Mountain High. That's a good question. Thanks for asking. Okay, Esma J. Hey, Ryan, before you go, I just want to say it's crazy how much your channel has grown. I remember when you had like 800 subs. It just blows my mind sometimes. I thank you for all the support. Yeah, it's pretty crazy to see where this thing has come so far and, where it continues to grow. So there's this... I'll show you guys something cool real quick. I don't know if you'll get as much of a kick out of it as I do, but... I have fun with this. So there's this website called Social Blade, which is basically social media analytics. And sometimes I like to pull up my channel right here. It'll give you tons of cool stats, show how the channel's growing and stuff like that. It says daily, on average, my channel's growing by almost 100 subscribers, which is pretty accurate here. But what's really cool, if you go over to the future projections right here, this has me stoked. By this time next year, 12 months from now, I should be at over 100,000 subscribers if I just keep growing at this same rate, which to me is just, I don't know if that'll actually happen, if that's actually how it's going to go, but that's going to be absolutely insane if that's the case. And I'll tell you what, I will definitely put that cape back on, grab my broomstick, and yell about Sparta then as well. So anyway, Chris here says, I hope I get to be the first Patreon member. I can't wait. Yeah, guys, so I'm really hoping to get the Patreon up and running. Maybe next week. If not next week, it should definitely be done the week after. I'm going to spend some time on it this weekend just trying to finalize things. But if I don't finish it this weekend, I'm hoping to finish it next weekend. But yeah, I'd really like it where my goal is either next week, by next Friday, or the Friday after, we can start doing the official Dividend Happy Hour after party. And I'll certainly keep you guys posted on my progress there, but I just need to cross all of my T's and dot all of my I's on the Patreon page before I make it go live. And I'll even put out too, as soon as it goes live, I'll put out a community post. I'll put out an email blast. I'll turn on the bat signal so you guys know what's going on. So Let's see here. So Jim here says, I need to start my cutting phase. I've been on the bulking phase since 1956. So fun fact, Jim. So growing up, I was always a really skinny kid. Well, for the most part. Probably from 5th grade on, I was very skinny. In high school, I graduated pretty much same height I am now. I'm like 5'8", not very tall. I was 5'8", probably like 125 pounds when I graduated high school. Very skinny. And that December, that New Year's actually, it'd be New Year's 2012. My resolution was just to gain 10 pounds. I was just thinking, I'm sick of being the super skinny kid. So I'm just 10 pounds. And I made a bet with my dad. So I bet him that I could gain 10 pounds before he could lose 10 pounds. And he said he's pretty much in the same exact place. I don't think he's lost 10 pounds since we made that bet. But what's crazy too is I ended up going from about 130 pounds to close to 200 pounds over the course of a couple years. I really bulked up. And then I did my first kind of diet down and got down to about 150. And since then, I typically hover between, I'm actually kind of heavy right now. I'm about 190. But I typically hover between like 165 to 175 if I'm just kind of maintaining things. Don't really have like a goal. So, let's keep going here. Let's see here. It's the intercomposed. It's the intro. What are we talking about? I don't remember what we were talking about here. What do you mean it's the intro? Let's see here. Yeah, Luis here says, after you hit 30, losing weight becomes a whole other ballgame. I lost a lot during the pandemic, both after going back to the office. It's become a challenge. Man, I lost when the gyms were shut down. There were a lot of them. All of them were shut down in Sacramento, where I was living. I lost so much. I lost pretty much all of my lifting progress, and I pretty much had to start from scratch once the gyms opened back up. It was a bummer, but to stay active, I ran a lot. Like I was running every day, and like on the weekends, I would. I've never been a big runner, but I just got into it. It was just a way to stay active and burn calories and just get the wiggles out. But yeah, I got really. I lost a lot of muscle during the pandemic, for sure. Intercompose, the intro gets you the subscribers. Well, what do you mean by that? Exactly. I need to pound this Coke Zero. Okay, I do think I'm going to go in just a moment, guys. I'm going to call it a night. I think I'm going to... I want to hear what Intercomposed has to say, but I want to hop off and I think read a little bit. Oh, you have a nice intro to your videos. Oh, well, thank you so much. I appreciate that. I used to have, and a lot of you guys will remember this, I used to have, let's get into it. You guys remember that? Man, that was classic. Yeah, I used to have that, then the bing, bing, bing. Maybe that wasn't it, but I had that song that went with it. And I'm actually glad I ditched that. That was kind of a fun little thing, but it's better without it. It's better just to kind of get into it. Delbomb, you should have a fitness chat in the Patreon. Yeah. I'm always down to talk health and fitness stuff. I know like that's totally not what we do here. We're talking about dividend stocks, but I love doing that. And if I was going to make a channel about anything else not related to investing, it would be health and fitness for sure. And I used to actually post a lot of that stuff on my channel way back in the day. If you go watch, because I still have some vlogs, just on my channel, and I used to post some of that stuff, but I don't know. I didn't really like making videos about it. I love it. It'll always be a big hobby of mine, but I don't know. Oh, Rick says, I did not like that lasso intro. Yeah. Yeah, I know. I mean, it was, I think people just put up with it because they liked me, but I think a lot of people probably shared that same sentiment. Luis, Professor G is also into fitness, right? Yeah. Professor G, he used to own a CrossFit gym. He was, man, he was jacked. Like, that guy was shredded. Yeah, Professor G was super into fitness, and I was actually asking him about this the other day. We were just chatting. I think we were just talking on Zoom or something, him and I. And it was after we did that video together. We were just talking, and I asked him about his workouts. I was just curious, like, what are you doing? Like, are you still working out as intensely as you were before? Because he was really into it. He would compete in CrossFit and all that stuff. But he told me he doesn't really do it to that extent anymore, which is true. It's hard. Like, he told me he used to, when he owned his gym, he would work out probably 3 hours a day, like a couple times a day. He'd probably work out. He would probably work out 4 to 5 hours a day every day. I used to do that too, maybe like 3 hours a day. But you just, I don't know. No, I don't got time for that anymore. I wake up early and I go to the gym and I get a good hour to an hour and a half in, and I do cardio on top of that now that I'm trying to slim down. But there's just other things going on. Lucas, didn't you manage influencers' Instagrams? I did. I used to. So I've kind of had a couple. I don't know. I've kind of had a couple little entrepreneurial ventures, none of which have really worked out, but they've all been fun and they've all kind of led to the next thing. The first one actually was a fitness-based apparel company called West Coast Muscle, and that was so much fun. But in doing that, I got really good at growing Instagram and building a social media presence, primarily on Instagram. And it got to a point where people would reach out to me and say, hey, how did you do this? How did you do that? How did you grow and whatever? And so I turned that into a business where I basically grew people's Instagrams for them. And that kind of turned into the job that I had before this. And that job turned into me doing YouTube. So it's kind of funny how everything kind of leads to the next thing. But this, I planned this. This is it for me. Like, this is the path I'm on. I love doing this. I absolutely love doing this. And this, just like dividend investing, seems to get better over time. And so I really am happy. I'm really so happy that I started doing this, and I really hope it keeps growing because it's just so much fun. And having said that, I'm gonna hop off in just a sec, guys. But having said that, if any of you guys have ever thought about creating a YouTube channel and talking about this stuff, or starting a podcast, or starting an email newsletter, or a blog, or something kind of like this, I'd highly recommend it. It teaches you so many great skills, and it's a lot of fun, and you never know what they can grow into. You seriously never know what they can turn into. It could be potentially life-changing. So I'd highly recommend it. It's not always easy, but it's so much fun. But anyway, guys, I think this is a pretty good place to wrap it up. But real quick, this is my mother-in-law, guys. Say hi to her. Say hi to Lori. Hi, Lori. And then Esma J, you should make a video about your channel's growth one day. Maybe one day. Maybe we do that on the Patreon. We could do that on the Patreon. I'll talk a lot more. I could talk more about other stuff on the Patreon too. I know a lot of people here aren't really interested in this stuff. Everyone's saying hi to Lori. Say hi, Lori. Say hi to Lori. Phil says good night, Lori. Oh, that's funny. That's cool. Frank here says, Ryan, oh man, I missed it. I just got off work. We'll replay the stream. Have a good weekend. Oh, Luis here. Congrats on your son-in-law. That's nice, man. I love you too. I love you too. Anyway, guys, I'm going to hop off now. Thank you guys all so much for tuning in and hanging out with me this last hour and 20 minutes. Oh, real quick. Louis says, we heard all about the engagement and we've been officially invited to the wedding. That's right. That's right. So anyway, thank you guys all so much for tuning in. I really appreciate you guys watching. As always, this has been a lot of fun. Be sure to tune into Sunday's video because Sunday is the monthly dividend income video. It was a really good month of dividend income, and I cannot wait to share it with you guys. But hope you guys have a fantastic weekend. Thank you all so much once again for tuning in. I really appreciate all you guys. And I'll see you in the next one.